We're here speaking with Andrew Whitelaw from Thomas Elder Markets. Andrew, look, we've focused a lot, necessarily so because this is what markets are doing on what's going on in the Ukraine, the Black Sea and Russia. We've got problems not only on the grain side, but the input side as well.
Yeah, so we've had, again, it seems like a Groundhog Day with Putin being the main driver of markets. He's definitely making himself felt on the world stage. What we've seen in the last couple of weeks is Putin starting to intervene in markets. And the first one and the big one, in my view, is he's shut off the gas to Europe and basically said the gas doesn't go on until the sanctions are removed. And so Europe is heavily reliant on Russian gas to heat their homes. But probably more importantly for Australian farmers, they are reliant on Russian gas to make fertilizers. And so with the gas price where it currently is, a lot of fertilizer manufacturers have said we're going to have to shut production because we just can't sell fertilizer at the prices that gas is currently retailing for. So, it's probably looking likely to be another big year of fertilizer prices at least for the rest of this year and probably going into next year. We're not going to see it back to average levels. I can pretty much guarantee that. But also, he's sort of, as we spoke to a few times over the last couple of months, they opened up a grain export corridor to allow grain to flow out of Ukraine. And Putin made a statement basically saying that he wants to review that agreement, which has got a lot of people in the market concerned because it was only just starting to really ramp up and get grain flowing. But his views are that it was supposed to be an agreement to help the developing world. He believes that it's not helping the developing world, and most of the grain is going to the developed world in the West. And so that's a bit of nonsense, to be honest. But I think what the big concern is that they will enact another naval blockade, and that is a big concern because the world needs that grain. But that has helped put a little bit of fire in grain markets, and because obviously if they reduce their supply of grain to the world, then that is helpful for Australian producers because, well, we sell our grain on a global market.
Absolutely, and that's a good point to sort of pick up on. There's quite a few points that arise from what you've said there. First of all, as we've discussed with markets, despite the propaganda from the Russian government, in the end, increased supply, whether it's initially going to the developed world or finds its way by second-hand effects to the developed world, more supply means more food for those who need it.
That's right. So it doesn't actually physically Ukrainian grain doesn't have to go to the third world. However, just the fact that grain is flowing puts prices down, which means that if they're buying it from elsewhere, it becomes cheaper and more accessible for those consumers of grain. So it's just a bit of it's another market where we're really talking about the market being driven by one man.
Yeah, well, just looking on the Australian market side, I saw something come across my desk from Rural Bank yesterday just about their views about where the market price might go for grain, and they were saying, well, really it's going to come down to even no matter how good the grain price is, it's the input costs that are going to do some damage. Do you think Australian farmers sort of pivoted perhaps away from canola and into maybe the grain side of it towards the later part of planting, knowing that there's maybe a lesser input cost problem on the grain side?
Look, Ricky, that is something that we've been saying for over a year. I think we've said it on nearly every talk that we've had together, Ricky, is that the cost of production is a major barrier. We've been talking about a cost price squeeze in that we've got fertilizer at high levels, chemicals at high prices, labour at high prices, diesel at high prices. And we've got a grain price that's not necessarily keeping up with that price. So, yes, we believe it is. But in terms of canola, we have got a very big canola plantation in the country at the moment. There's a lot of canola getting planted. Even anecdotally, I drove over to Adelaide last week and met you, and it was wall-to-wall canola. I drove to my farm on Monday, a lot of canola, and I've just driven to Canberra today, and a lot of canola. So whilst it's not scientific, all I can say is there's a lot of yellow out there.
Yeah, absolutely. Fields of gold. When it comes to just on the markets side, I had a recent chat with someone about what's happening in markets from Grain Producers Australia, and looking at just export from Australia, the ACCC, I think last Thursday, put out a report saying, look, the regulation of ports they think is under review, but it sounded like grain producers were a bit nervous about the possibility of easing off regulation on ports, even though there's those new ports that have come on stream because the Australian output sector, if you like, the means to get it out of Australia has been put under unprecedented strain with high supply. Do you think that there is a case for reviewing how much we regulate the ports, or do we need to just keep all of the controls in place?
Look, I think, these sort of things, it's always good to review the industry. What we need to do is we need to find an equilibrium where the market is performing well. At the moment, the biggest issue we have in grains in Australia is probably actually not the ports necessarily, but actually getting the grain from upcountry to ports. And that's a major issue that is stopping or slowing grain exports. But reviewing it, seeing what's happening is not necessarily a bad idea. But I think, we still have some of the best bulk handling systems in the world, and we just got to make sure they're running as efficiently as possible.
Well, I guess that's the point, isn't it, when it comes to a farmer? If there's a good price on offer, the ability to get that grain to where the price is being offered relatively quickly, is that where are we seeing that in the Australian market? Is opportunities are being lost because you can't get the grain there to capture that price?
Oh, absolutely. And that's just a function of it being a huge crop. When we have a big crop, it's harder to get all that grain out. There's just excess supply. That happens around the world. If a country has a big crop, they tend to have a discount on the price. But the reality is that, we are heavily discounted versus the rest of the world and have been for about 18 months and probably will be for another 10 months, 12 months. The reality is, though, that I was asked a question at a conference a few weeks ago, when will we get returned back to having a premium? And the answer is not nice. Probably when we have a drought again. And we're not producing as much. And that's where the concern comes, is that whilst we're getting a discount to the rest of the world, we are, however, producing enough to actually sell.
Absolutely. Good conditions at the moment. As you say, fields of gold on the canola side. Andrew Whitelaw, people can track the markets with you and your colleague Matt Dalgleish at thomaseldermarkets.com.au. Thanks so much for joining us again on Flow.
Not a problem anytime, Ricky.